So what I wanted to do was make a return back today on this Australian Canadian dollar currency trade that we currently have developing. And since we have a lot of talk going on about this trade and the zones that are possibly in this trade, I wanted to verify my current analysis from the beginning so that people see why I am following what I am seeing, because we have interesting movement on the Australian Canadian dollar presently. So I wanted to give you a look at what I'm looking at again, because as we know, as traders, we're always reanalyzing moves, because all trading is probabilities. Now, what I have done is I've on this daily chart looked at this Australian Canadian dollar, okay, and the best move that I saw in the past was this move on the daily chart from here to here, which was a 987 move, okay. Now what I said that this was profit taking of the 987 that happened here, and then they drove the market down to start the new move up, which I have been analyzing, okay. What I have also done is from this new move down, I have also set in my new fib zones for the move down. So I have up and down. And what I'm doing is trapping the market, because this is my last move down that paid out, and it's over, okay. Because rarely on these crosses do we see for the 987, and this is what this is right here, is a 987. It was perfectly moved, perfect respect, boom. So now all the down data we could have could be from this point here, okay. So that was what we did, and that's what these red lines are, is they are the fib zones for the move down from this point. Now what we're saying for a move up is we're analyzing this point right here, because we're saying that this is all profit taking of this 987, profit taking, okay, then movement to take the market back where it need to go, then they throw the fake, and then boom, they start off their sequence going up. So what we're going to do is go to smaller compression so we can take better looks at this happening live. Now, as you can see, I also have the awesome oscillator attached down here, but this is on the 4-hour chart, so I'm not using the awesome oscillator for entry exits on this. So what I have here in the light blue is the 0, 89, 144, 233, 377, 610. Okay, now these yellow lines were that last move down, so we can delete them just to clarify this move. Beautiful. So what we have is the blue being 0, 89, 144, 233, 377, 610. And what we have is the red is being from this point are 0, 89, 144, 233, 377, and further down we have the 610. Just because what we're doing now is trapping the market with these Fibonacci zones. So what we have now is our two flows that this could be possibly facing. So what we want to do now is take this down to 1-hour chart and combine it with our awesome oscillator. Okay. Now, also, what I am saying is that I am not in doubt that this could be in two moves, but this is going to be a huge deciding point, so that's why I'm so interested in this currency pair. Now that I've taught you the whole system, including the Fibonacci analysis and the awesome oscillator, you can use this and see how it all works. Okay, so what we did was from this move that we had up, we had respect of a 377. We were saying that we're possibly retracing to a 144. Now it's in the 89 level, and then taking out the 610. So this is important, because now this move realistically has come to the last point it can turn, this 89. Now it is came out of its Fibonacci retracements, which I'll put up the retracements. Okay, so we see that this 618 retracement was overlapping perfectly as 144, and we thought it was going to turn the market, but it didn't, and it's sitting on this 89. So on the 1-hour we can take a look at this, okay. Now, as we stated, that the awesome oscillator did burn us right here, even though it did pick up about a 50 pip move, which was profit. So if you took advantage of moving your stop loss, you would have been in profit. Now, on the 1-hour chart, we have the awesome oscillator currently doing is still posting down. And remember, the 1 hour compression is where we are most importantly looking at this. Now, when I said I was going to be looking for a north entry at this level is because we had beautiful divergence here in these slopes. Now, what I'm talking about is divergence, okay? Now, what we have here is we have the slopes in the awesome oscillator, okay, are trending up. And we have price from this point here, okay, sorry about this, but it'll be necessary to see. And to prove this point that we are trying to prove. Okay, beautiful. Now what we can see is that the divergence here, that this chart is leaving in the 1 hour. Now this is what is, we look for to note reversals, divergence in the slopes, you know, correlation of if we're looking to sell, you know, we're red below the zero posting south. Okay, and if we're in a buy, we're looking for the blue-green color to be posting up above the zero line, so north. So what we have here is divergence, and we had tested this overlapping retracement with this overlapping fib sequence of the 144, which is a strong level for this to turn and hit that 610 if it was. Okay, so the divergence led us to believe that we were going to turn. So now what we're saying is that we want to wait and see what is happening at this 89 level. We want to wait and see is what's going to happen. Is this going to turn at the 89 and the awesome oscillator is going to pick up on what is reversing? Or is this going through, as we can see here, in the red moves? Remember, this is our 0, 89, 144, 233, okay, and below 377 and 610, right there. So what we're saying now is that what happened here is that this was all the 377 was it? I don't believe so. I believe this market could turn here. But if it doesn't, I'm not too worried because what it's going to do is it's taking out a 233. Next, it's going to take out the 377 and then have a 610. So 377 is going to be hit no matter what towards the downspill if this does not turn here at the 89. Ultimately, I believe that this is going to turn here, and then we're going to see the awesome oscillator start posting above here, blue bars above the zero, so in the positive, and that would be our entries to get in for the 610 north, which is up here at the 0.9009 level on the Audi CAD. Now, if we turn here on this 89, we are looking at over 500 pips. So even if you got burned once here for 30 pips, got burned here twice for 30 pips, at 60 pips you're down going to be up 500 if you did get burned. Now, we never had on the 1 hour chart, except for here, the awesome oscillator tell us to get in. Okay? And we really want to take a look and keep an eye on this because this is a Audi CAD and does not involve the US dollar pair. Now, the US dollar is under some interesting speculation currently. We're waiting for the official approval of the $700 billion bailout of the world's biggest insurance provider, AIG. So those are kind of shaky times fundamentally for the US dollar. So we're going to sit back, relax, let the market take a tone for the data that is about to be released this week. And from there on out, we will have the path fundamentally of the US dollar for a long time. And then we'll be able to pick it apart with these Fibonacci sequences. So with this, I hope that you are really starting to put together this whole system that we have brought to you that combines the Fibonacci sequence, retracements, expansions, and the awesome oscillator on the 1 hour chart. Now, as you can see here, everyone may be thinking, which way is this going? And that's why we set up both ways and only wait for key points. So now remember what we're saying is that key point here is if this falls from the 89, that it is going to take out this 233 in the red, and that it is in a down. And what we will wait is for the retracement to occur, and then take out the 377 that will be below, sitting there. And we're waiting for the awesome oscillator to signal us all on the 1 hour chart. So with this, with the system presented, I would like you to all have fun and happy trading. Take care. Bye-bye.